Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking at this low over here to be the end of this horizontal corrective structure and then a WXY and the beginning of a new impulsive structure to the upside for much higher prices to come. We are looking at a finished wave 1 and a finished wave 2 for now the beginning of a bigger wave 3 to the upside. The only problem is, and that lowers the probabilities, is this wave 2 over here. This wave 2 retraced to the 0.886 Fibonacci taken from the low to the high of this wave 1, which is a very rare target for a wave 2. Most commonly, wave 2s retrace to the 0.5 to the 786 Fibonacci, and the 886 is more common for either a wave B or a wave X, which increases probabilities that any move to the upside from the 886 has a higher probability of being a wave C or a wave Y, which then in turn increases probabilities again to then continue to the downside at least once more to take the lows over here. Now we do have some bullish CVD divergences over here between the low and the higher low of this wave 2, where the target is the high of wave 1. Now preferably, I would also like to see bullish CVD divergences on the right side of this most recent high, building up constantly for eventually this high to be taken, just because the probabilities of a wave 2 bouncing on an 886 usually is not really great, but I do think it's important to mention these bullish CVD divergences. If, however, you do get a lot of bearish CVD divergences over here, also at resistance at the moment, then these will have priority. If we then zoom in to this move towards the upside after the low of wave 2, then this is what we are looking at. We are looking at a double 1-2 towards the upside. After inside of this wave 2, we're looking at a double zigzag WXY, ABC in W, any corrective structure in X, and another ABC in wave Y. In this double 1-2, we're then looking at a finished wave 1, finished wave 2, and currently working on this wave 1, which potentially is finished, and we might be in a corrective structure for 2, or we get one more high, because we are at resistance over here against this target box, sitting between 35.3K and 35.4K, but just above price at the moment. We have a daily level here at 35.4K, which is very interesting indeed. Currently over here, price rejected at the point of control of this small range, but if it moves up, I'd be looking for that daily and see the reaction over there, after which eventually we expect this wave 1 to be finished and then be looking for a wave 2 to the downside, where the most common target for 2 between the 05 and the 786, which is currently between 35K and 34.8K. Also over here, we have some additional confluence below price, like a target box, as you can see, which is sitting between 34.7K and 34.8K. Now in this scenario, we eventually want to see an impulsive move, right? We want to see a parabolic structure towards the upside and a big candle towards the upside on high volume, because a wave 3 should be the strongest and biggest wave in an impulsive structure. The invalidation is if price would dip below this wave 2 over here at 34.6K. However, based on historical data, even though the probabilities are not great when a wave 2 retraces to the 886, it is not impossible, and we have seen this once before thanks to Santiago. He posted this in Discord, where we are looking at a bars pattern over here, which is the pink candlesticks that you see on the chart over here, which is basically a copy of past price action but then put on top of the current price action. And you can see there's quite a lot of overlap, but more importantly is the trend line that I pulled over here, where you can see that the pink lows became higher, 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 and eventually lift off towards the upside. We never took the liquidity of these lows over here, which is quite interesting because you can see there is quite a little bit of like overlap with the current price action, especially with this move up and this move down, where also in pink this move to the downside did not take the low of the previous move over here, of this move towards the upside. So that is definitely interesting and something that we have to keep in mind. Also with the bearish scenarios coming up, if price moves to the upside, we have to keep an eye on volume. If we then look at the bearish scenarios over here, where we do expect another move towards the downside, then in a WXY sideways double combo, we're looking at a flat in W, zigzag in wave X, which is also the most common pattern in a wave X, where wave X retraced to the 1.236 and the 1.38, pulled from the beginning to the end of wave W, which is a common target for wave X if it takes the high, the beginning of wave W. And then we're looking for either a flat or a triangle in wave Y. However, However, based on the structure to the downside here, which then has to be counted as a double zigzag, a triangle is invalidated, and therefore we have a wave A, and then eventually we're looking for an A, a three-wave structure in B, and a wave C to the downside in A flat. So that means that in this scenario, we are then taking the high, looking for resistance between the 0.5 and the 1.618, which is between 36.1k and 37.2k. Most common target for B, between the 1.236 and 1.38, between 36.4k and 36.7k. We also have some resistance in this area. Of course, we have the white target box, which has been tagged once over here, 35.9, 36.2, but also this not yet touched blue target box, 36.7k to 37.1k, for then potentially a move to the downside. But what is going to be so important over here is that wave B has to be a three-wave structure to the upside. And if you're going to see big candles forming towards the upside on higher volume, you have to be aware that we might be in a potential wave 3 towards the upside instead of a 3-wave B. So observing the reaction in this area is going to be very, very important indeed. Now then the final bearish scenario, where we are looking for a WXY to the downside, where price is not going to take the 36k high over here before reaching the lows at 34k. In this scenario, we have a zigzag in W, then a wave X, and looking for a wave Y to the downside. Now, a WXY is not allowed to be part of a bigger WXY scenario, because you can't have a WXY inside a bigger wave Y. And that means that this high over here has to be the high of a wave 5 of the impulse towards the upside, and we're now looking at a bigger corrective structure towards the downside, where then potentially this WXY is only the first structure of a bigger three-wave structure yet to come. Now in this particular scenario, we are then looking for a wave W over here to the upside, already finished. Wave X is then a double zigzag in an ABC, and wave Y is then a normal zigzag in again an A, B, and eventually a wave C to the upside inside of this wave X. What is, however, not preferred is that this wave Y is so incredibly long in time compared to wave W and wave X. It is not impossible, it's just something that you don't really like to see, but this scenario at the moment still carries enough probabilities as long as price is not hopping above this target box over here, which is acting as resistance at the moment. Now, if we look at the levels towards the downside, of course, the triple bottom, double bottom, you know the levels by now, right? These are the levels that are interesting to be potentially taken if we move towards the downside. If we look at the CVD divergences more locally, then over here we have bullish CVD divergences, which just now played out as this little high got taken over here. So that is very nice indeed. And if we then go to the 15-minute chart and I quickly refresh it, then you can see we also have bearish CVD divergences, lower high on price, higher high on yellow, which is a bearish CVD divergence, where then the target is going to be this low over here. But of course, at the same time, we did have some bullish CVD divergences, so be aware of a potential push. But for the bearish CVD divergences, this low is the target. The bullish CVD already played out now that the high got taken. If you then finally look at the probabilities of the different scenarios, I wrote a little bit of a story for you over here just to make sure that I can communicate it well. So on the lower time frame, which is basically the 1 hour time frame that we are at the moment, continuation to the upside in the end is going to be the highest probability scenario, because this move to the downside does not look impulsive, it looks corrective. So either you move up directly, or we're going to have a WXY, corrective structure, whatever, and eventually move to higher prices to take this high over here. The highest probability to take the lows before any significant impulse to the upside is what is at the moment preferred, because, as I mentioned, the impulsive scenario over here has low probabilities because of this wave 2 over here, which therefore means that the bearish scenarios have a higher probability of playing out, either than the WXY with a flat in Y, or you're going to have this over here in a WXY, which means that before any significant move towards the upside, before a bigger impulsive structure to the upside, you're first going to take the lows over here based on probabilities. So either by a flat or buy the WXY scenario, you're going to take these lows. And at the moment, based on how slowly price is grinding here towards the upside, potentially the WXY scenario is favored. I do have to keep in mind that over here we did have bullish CVD divergences building all the time, and as long as this low over here isn't taken, then we have the potential of continuing towards the upside. And that's also what I wrote over here. If price can pass the target box where it is at the moment, this one over here, then I would be looking for a potential flat scenario, and then over here an A, B, and then a wave C to the downside. But keep in mind, a wave B has to be a three-wave structure. Of course, that is something that we are going to keep our eyes on if price moves towards the upside. And if volume increases a lot, we have to be wary of a potential impulse for continuation. But at the moment, as it stands, the probabilities for me would be higher for the W, X, and Y scenario based on the slow grind that we see over here. If it can pass the target box, then I'd be looking for a B and a C depending on the move to the upside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.